Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, weekend here with the President's Day weekend. We do got just a couple economic news releases scheduled for today. We will have more later this week, but today we have the Empire State Index. This is the manufacturing numbers out of the New York region. So the last reporting in January was at 10. It was supposed to have a slight pullback at 9, and it exceeded that pullback to down to 7.8%. So anything above 0 in these numbers is basically still expansion. Anything below obviously is contraction. So we're still showing expansion, but just at a slower pace than initially thought. Same thing on the home builders index. We had a 57 back in. This is the confidence level on the home builders gauge here. So we had a 57 on January, and in February we were supposed to go up to 59, and instead of going upwards it actually went backwards down to 55. And anything above 50 in terms of this type of index is considered expansion. Anything below 50 is considered contraction. So we're still there, but it did scale back a little bit in their overall confidence where things will be going. Headline news: stock market's down. It did look at those numbers, but they're kind of putting those on the side. And the big thing right now is Greece, which has brought the market down a bit because they had some. It's like they're kind of playing, as they kind of termed it, they're playing chicken. And I guess they had meetings yesterday during the President's Day, and kind of stormed off the meeting. Didn't even last 2 hours basically. Bond market. Here's stock market. As we saw, we did pull back a bit last week. We're up about 1 point today, so we're basically break even. So there's no change in pricing from where we left off on Friday. So, but we did pull back a bit. I would expect us kind of hitting this bottom ledge here with this correction here. As I mentioned last week, we'll probably hit it a few times before we bounce upwards. So be prepared. I think we will see better improvement in our rates again. We'll get those back, but it might go sideways for a little bit, testing this floor before we go upwards. But in the meantime, get used to it. Here's the rates where they are now. Obviously, they're still very good, but obviously we saw better, and I think we'll get some of those better rates probably in the near term. It's hard to tell exactly, give you a timeline, as some of these trends are lasting a little bit longer than what they used to in the past. So we'll just kind of have to wait through. Greece right now is going to be going on until the 28th of February, so they have that deadline for the payments. If nothing can be resolved, they may even go into panic mode. That could help us out, and obviously bad for stocks. We'll have to kind of wait and see. But anyways, hey, also coming up in March, I don't know if you guys are aware, you may have heard that Fannie Mae did their 3% down payment, and that's strictly for first-time home buyers. But Freddie Mac will also be coming out with their 3% down payment, and that's for anybody. So you don't have to be a first-time home buyer to qualify for that program. So if you need any assistance in pre-approvals or even refinances, I'm available for that. Please feel free to contact me through my profile. I'll be more than happy to help you guys out. But meanwhile, have a great day. Thanks for watching. We'll see you guys next week.